Good morning, Dave Johnston here with Day Trade the Markets. We're looking at the gold market here. This is a 2-minute chart of the Feb 2017 contract, and I put an order in to sell here at 1174.40 towards the top of this magenta bar. We had come down below overnight and broken back down below this level here at 78, which in my view is a bearish indication. We've come down here also, and let me just put an arrow right here, or a line in that the overnight low was at 73.50 right here, so I think we're just kind of testing that at the moment. But now that we've broken through here below 78, and I'll just go ahead and put another marker up there, is that now that we've broken through that area, we're testing the overnight low. And you can also see from over here that yesterday's low itself, let me just put a line over here too. This was yesterday's low right in here. And so we're giving that a good test. So I'm actually anticipating the market to, okay, there we just got filled on that, to use the top of this magenta bar as a likely resistance area, and then come back down and test towards the lows of the day again, down into this area. It might take a few minutes to get there, but in the meantime, I'm going to go ahead. Now, the low of the day right now is at 72.60, and we're short from 74.40. So if I buy it back at, let's say, 72.90, that's a little bit higher, just a little bit above the low of the day. So I'll go ahead and put that one into buy half of these contracts back. Yeah, we just got the 2 on there. So okay, it's bounced up. Now I also need to go ahead and put in my protective buy stop, and I was going to put one in roughly at 10, 12 ticks, but now it's bounced up while I was talking here, so I'm going to put it just above that high where it bounced up there. That's at 1174.70. So I'm going to put the stop at 1175. So buy stop for 2 at 1175.50. So that's a 9-tick risk we got on that, with the expectation that the market's going to go down and hit the low of the day. So we just did dip down to 73.30 right here, 73.30 right there, and our low for the day so far is at 72.60. So I think everything's kind of set up for us for the time being. We've got I think a fair stop in place, just risking the, we've got a 9-tick risk on here, and our first objective is, I'm sorry, an 11-tick risk, because we're short from 74.40 and our stop is at 75.50, so that's an 11-tick risk, and our first objective is 15 ticks. So I think we're all set up and ready to go here, and we'll just pause the recording, let it unfold, and I will restart the recording as the market dictates. I just realized I've got my stop maybe a little bit too high. When that market bounced up there, it hit 1174.70. So I'm going to bring the stop down to 1175. So that's 3 ticks above that that little bounce that we just had there. So our risk from 74.40 to 75 is 6 ticks, not 11. So just wanted to update that stop that I had there. So once again, we'll go ahead and, oh, it's coming right down to, okay, we just got filled. Okay, so I need to adjust my stop here to just 1 contract. I'm going to, now that it's moved 15 ticks in our favor, I'm going to go ahead and bring that stop down to break even. Okay, and I should put a marker in here showing that we did get filled at 1172.90. That was our first fill right here. Okay, so I'll just put that marker in there. Nice, it actually just hit our price right on there, so somewhat fortunate, I think, to get filled. You don't always get filled when it hits your price exactly, and there's our break even right in there. So just so we know, And it's coming right back up to it, hasn't it? So just within a tick of being stopped. So pretty volatile market here, moving around, but did get the one filled in. So maybe this is just a reaction bounce. We'll get another leg down. So once again, I'll pause the recording. Okay, just resuming the recording. Market's been kind of volatile down here. We've our break-even stop. We're still in there, but it's come up several times to within a tick of it. It it kind of has that feel. It's going to bounce on through. So just want to restart the recording and just give some thoughts here, because you can see here that since this magenta bar has formed, we've traded inside of it. We sold near the high of it for a good trade entry location. We got out near the low of it, so we had a nice trade there. But it's this kind of consolidation down here after a good sell-off and not being able to make some new lows. It's either going to have to break down and start making those new lows pretty quickly. Otherwise, this kind of volatility back and forth, and you can see these bars here mostly overlapping here, sort of forming a mini consolidation area. If it doesn't come down and start making new lows pretty soon, because remember, this lower horizontal line that I put in here is yesterday's low, and the shorter one here is the overnight low. So we're giving it a good test here, but not moving below it. So it just kind of is starting to have, okay, there we just got stopped on that for break even on the second contract. So, it's likely to have a bit of a bounce at this point, but I still think the gold market has got some weight on it, and even if it should rally up towards the high of the day, it's probably find some resistance there. May even pop up here and then turn around, but I think that's where we had to put our stop. Break-even basis here for the second half of that contract. So anyway, that's a quick short trade in the gold contract. So utilizing the day trade the market software. And of course today is, I don't even know if I mentioned it, but today is Thursday, December the 8th, 2016. So thanks for watching. I hope you got something out of that. You can contact us at info@daytradethemarkets.com. Thanks for watching. We'll see you next time.